My dividend income is absolutely exploding as of recently. And this is all sort of mostly because I changed my recent strategy and I've been putting a ton of cash balance into this higher yielding dividend paying ETF, which I find super appealing. Now, if you haven't been following along with my videos all that recently, no big deal, but just to give you an idea, we're currently sitting at over $76,000 of total yearly dividends. And keep in mind, these numbers are all estimated. Not everything is 100% accurate in this dividend tracker, but this is up substantially even over the last few weeks. And this puts our dividend portfolio over $6,360 on a monthly basis. And again, this is all due to the fact that I've been buying this new ETF like crazy. Now, if you want to learn more about this ETF and see exactly how I'm raising my dividend income so quickly, make sure to drop a like down below, subscribe, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the dividend paying ETF that I've been buying like crazy is not only the Schwab US Dividend Equity ETF, which, side note, I still have been buying a ton of SHD every single day because my goal of getting to 1,000 shares of SHD by the end of 2024 is still alive and well. And side note, we're sitting at 582 shares as of current, so we are right on our way. But even though I love SHD and I would consider it a buy and hold forever position in my portfolio, with SHD only yielding around 3.5%, those daily buys of SHD, although later down the line are going to be extremely helpful, I'm hoping because of the dividend growth rate and because hopefully the overall growth of the ETF. The 3.5% yield is not necessarily going to jump the portfolio's dividend income up all that much. But the position that I've been buying like crazy as of recently, because I've looked a lot deeper into it and I am quite a fan of it, is none other than NEO's S&P 500 High Income ETF, or SPYI. Now, just over the last few weeks, I can't remember exactly what I had, but I think I maybe had 20, 30, or 40 shares of SPYI. And as of right now, filming this video, I'm sitting at around 152 shares of SPYI, which is quite a bump, quite an increase from what we were at. And this is just over the last week or two. Now, I think it's important to share exactly what this ETF is, what it has to offer, and show you exactly why I'm particularly such a fan of this ETF. Let's dig a little bit deeper into this ETF and see exactly what it has to offer. So first, all right here on the NEO's website, it says looking for high monthly income. And I would say yes, who isn't? The NEO's S&P 500 High Income ETF, or ticker symbol SPYI, aims to offer high monthly income in a tax-efficient manner with the potential for upside capture in rising markets. Now, some of the objectives are to seek high monthly income in a tax-efficient manner, and also on top of that have upside potential when the market turns bullish. Now, this is also kind of cool. It shows that since inception, the NEO's S&P 500 Income ETF, or SPYI, has outperformed some of the largest income-focused ETF peers, and some of these are very popular. And just for full transparency, I personally hold everything in here. So you can see that the blue is total returns. This is dividends plus price return included. SPYI almost has a 20% total return, where XYLD has over 12%, JEPI has 16%, DEVO has almost 16%, and SPYI, of course, the king of all ETFs, has almost 30%. Now, if you've been watching me for a while, you know I've talked about SPYI in the past, and I have had a few shares of SPYI across my portfolios for several months now, but it wasn't until recently I dug a little bit deeper into this ETF and really realized how this ETF works and why I personally need to add more shares of SPYI into my portfolio. But digging a little bit deeper into this ETF, some of the negatives, I guess you could say, is the expense ratio is pretty pricey. At 0.68%, this ETF, because it's management heavy, is going to cost you a little bit more to hold on to. But with the promising total return so far, at least, the expense ratio doesn't bother me all that much. Now, one of the other reasons I wasn't exactly sure about how much SPYI I wanted to add to my portfolio long term is because a lot of these higher yielding ETFs, although many times offer nice juicy dividends, they seem to decay in price over time, meaning that, for example, if you buy a share for $50, even if it pays a 10, 11, 12% dividend yield, if a year later the ETF is trading at $40 per share, you didn't really gain anything. If anything, you lost money. But so far, since around 2022 at least, so keep in mind this ETF still is relatively new, the ETF is up 3.33%, which I hear you, it's not all that much, but it is in the green, and we haven't seen any major decay, at least as of so far. Now, to dig a little bit deeper into how the SPYI strategy works, it says right here, number 1, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to, of course, generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEOS, the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now take my word for it, as you build your portfolio over time, and I'm sure a lot of you are already very aware of this, you're going to want to think about taxes because, of course, as you start to generate a ton of dividend income, for example, they might not be taxed very favorably. Now, number 3, this is also one of my favorite parts about this ETF, and this is another reason why I really decided on going a little bit bigger in this ETF moving forward. It says the fund utilizes a call option strategy. Not selling options, but buying call options that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. So one of the main problems with a lot of these different cover call ETFs is that when you sell a cover call, your upside is basically capped. If the underlying moves up very quickly, you're not going to be exposed to all the upside. But with SPYI, because at times they are also buying call options of things like SPX, that means that if and when the market turns bullish, you're going to have potential exposure to the upside taking place in the market. Now, at this point, we're sort of getting into the weeds, and I really don't like talking about taxes all that much on my channel because I think that taxes are such an individual situation that can be so different, determining many different factors, but also looking at things like this right here. Just for an example, it is in connection with the monthly dividend payment of 47.5 cents per share that was paid back in January 2023, just for an example. It shows that 94% of such dividend will be return of capital. Now, return of capital is going to be taxed differently than ordinary or non-ordinary dividends, etc., etc. And like I said, I'm not going to go super deep into that, but just know that SPYI could be a perfect ETF with a great tax strategy for your portfolio, depending on what your needs and wants are. So we talked a little bit about SPYI, what this ETF is and how it works. We even talked about the total return so far next to some of the other popular cover call style ETFs and some of the main reasons on why I'm personally so attracted to this ETF as of right now. But now looking into the fun part, looking at the dividend for SPYI. We're talking an 11.67% trailing 12-month dividend yield, which is much higher than most other cover call ETFs across the market currently, and of course much higher than basically all blue chip dividend stocks. Now, what's also impressive and something that I was very eager to see how this was going to play out long term is if or if not SPYI was going to offer a consistent monthly dividend. Because some of these cover call funds, things like JEPI or even JEPQ, due to volatility in the market and due to the different pricing when it comes to premiums in the option market, some of the cover call ETFs pay a very drastically different dividend, which all in all is fine in most ways, but it is very nice to be able to sort of have an idea of what you're going to get paid next month and the month after that and the month moving forward. Now, of course, take this with a grain of salt. SPYI has not been around for that many years or even that many months and has not paid that many dividends compared to some of these other cover call funds, etc. But since the inception, SPYI has paid a very steady 46, 47, 48, or 50-cent dividend every single month since the ETF started. So now that we understand exactly what SPYI has to offer and why it fits exactly what I'm looking for, and by no means a single position that I want to add to the portfolio long term, but in congruence with other positions that I'm adding to the portfolio as of right now, I think that longer term I do want to add at least a few hundred more shares of SPYI to the portfolio and continue to watch it closely, see how it trades down the line because it is a relatively new ETF. But in the talks of SPYI or the NEOS S&P 500 High Income ETF, I want to hear from you guys down below. Is this relatively higher yielding ETF in your portfolio as of right now? And if not, what other higher yielding ETFs have you been buying as of recently? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.